for starting your week with us. Hello and welcome to Business Daily. I'm Lee Ji-yoon. We have a lot on our plate today, so let's first get started by taking a quick glimpse at today's highlights. The price competitiveness of Korean exporters sits at a 6-year low, mainly due to the strong won. What can Seoul do to boost its sliding competitive edge? An OECD report indicates that Koreans are not so satisfied with their lives, with numbers measuring life satisfaction falling below the OECD average. The price competitiveness of Korean exporters is sliding, with the related index hitting a 6-year low on the back of a strong Korean won. Our Shin Se-min starts us off.
Korea's exports, a key driver of the economy, are feeling the heat from falling foreign currencies and the strength of the Korean won. Korea Trade Investment Promotion Agency says the country's leading export sentiment index was just 45.4 in the third quarter of this year, the lowest it has been since the figures were first compiled back in 2009. The corresponding figure stood at 53.6 in the second quarter of 2011, but it has been on the slide ever since, unable to rise above the 50-point mark. Analysts say the fall in export sentiment is largely being driven by global currency depreciations, with multiple countries using monetary easing to make their goods cheaper on the global stage. The agency notes that while China and Japan have engaged in aggressive quantitative easing to depreciate their currencies, Korea's currency has remained relatively strong. Data by Statistics Korea, an investment and securities firm, show that Korean won to US dollar exchange rate from January 2010, expressed as a base of 100, remained mostly unchanged in the third quarter this year at 100.7. On the other hand, the Japanese yen nosedived to 137.2 over the same period. The euro also weakened to 126.1. Experts say that if the trend continues, Korea may be forced to act.
Korea will inevitably join the currency battle at some point, but the government should only make a move when the economy picks up. Korea should not solely focus on exports.
Experts say that while a weakened won alone could not revive exports given the current economic conditions, it's important to keep up with the global trend, and efforts to depreciate the local currency might be a policy to consider down the line. Shin Se-min, Business Daily.
And coming out of that, a sustained weakening Chinese yuan will have adverse effects on Korea's exports of steel and textiles. This is according to a report released on Monday by Korea Institute for Industrial Economics and Trade. The report warned that Korea's textile industry will be hit the hardest by a falling yuan as it faces off against China's price competitiveness, poised to make inroads into the Southeast Asian market. As for Korea's steel industry, which has stronger competitiveness and quality, the report said the effects won't be felt immediately, but that it must stay ahead of the curve by differentiating itself from cheaper Chinese steel. The institute added that industries unlikely to be hit by a weaker yuan include semiconductors, shipbuilding, and completed cars. Some financial experts speculate that the Chinese currency could fall by another 10% by the end of next year. Meanwhile, China's third quarter GDP growth rate came to 6.9%. This is the first time that it has fallen below 7% in over 6 years. The on-year growth is also down 0.1 percentage point from the previous quarter, but slightly above market expectations of 6.8%. The decline is partly attributed to the country's slowing industrial output, which, although grew 5.7% in September from a year ago, is still below market predictions of 6%. With over 95,000 units sold from July to September this year, Kia Motors has posted record sales in Europe in the third quarter. According to the European Automobile Manufacturers Association, the latest figure is up 9.7% from a year earlier, marking a record third quarter high. Up to last month, Korea's number 2 automaker sold over 295,000 units this year, up over 8% from a year earlier. The rise was driven by European consumers' strong demand for Kia's SUVs and compact sedans. The popular mini SUV Sportage sold over 25,000 units in the third quarter, adding to the more than 81,000 units sold since January. Being hospitalized doesn't stop him from being Korea's richest stockholder. We're talking about Lee Gun-hee, the chairman of Korea's largest conglomerate Samsung Group. According to conglomerate tracker 재벌.com, Lee held just over $10.1 billion worth of stocks as of last Friday, up nearly 14% from last year. He's followed by cosmetics giant Amore Pacific's owners Heo Kyung-bae, whose stocks jumped nearly 48% on year to $8.5 billion. Lee's son and vice chairman of Samsung Electronics, Lee Jae-yong, is third, seeing a 145% jump from the previous year. The 100 richest stockholders list includes 20 newcomers, including the chiefs of auto parts manufacturer Hanyang Precision and the chairman of Korong Group. And for more on last week and this week's stock market action, we have economics reporter Choi Jin-seok from SBS CNBC joining us on the phone today. Hello, Jin-seok.
Thank you for having me.
All right, so let's get started with an overview of how the Korean stock market closed last week.
Yeah, the Korean stock market finished last week with a mixed picture. The Kospi was down by 0.2% to close at 2030.26, while the Kosdaq gained more than 5 points. Profit taking was inevitable as the country's blue chip index surpassed the 2030 level for the first time since July 31 at the previous session. Foreign investors dumped more than 58 billion Korean won or $52 million worth of stocks. In addition, major exporters suffered from the strong won. Despite disappointing moves on Friday, the Korean equity market gained on a weekly basis. The Kospi rose 0.5% and the Kosdaq surged more than 1% last week. Since bottoming out from their lows on August 24, global equity markets have been rebounding sharply so far. As of last week, the S&P 500 rose by more than 8% since the late August correction. China's stock market has been enjoying a more than 12% rally, while the domestic market rose more than 10% as well. The sentiment has been boosted mainly by delayed Fed rate hike expectations.
All right, then. How did the Korean stock market close today on this first day of the week?
The market opened on a wait-and-see mode since China's Q3 GDP data was due to be released at 11 a.m. Korean time. Helped by stock buying from both foreign investors and institutions, the Kospi once rose to as high as 2036. China's Q3 growth rate stood at 6.9%, slightly better than expected, but the lowest since the global financial crisis. The domestic market reversed to slight losses after the data release, finishing the day mostly flat. The Kosdaq, meanwhile, closed above the 684 level, led by retail investors who bought 28 billion Korean won or $24 million worth of stocks.
Well, let's now move on to some major market events lined up for this week then.
Okay, along with China's Q3 growth numbers, U.S. earnings season is expected to draw global investors' attention. IT giants including IBM on Monday, Yahoo on Tuesday, Google and Microsoft on Thursday local time will report their quarterly results. The so-called new tech companies such as eBay on Wednesday and Amazon on Thursday will disclose earnings too. Share prices of Amazon tend to move sharply after its earnings release, so investors would need to keep a close look at how the results affect the overall market. So far, 58 out of 500 companies reported Q3 earnings. Earnings growth was minus 4.6%, slightly better than expectations. However, U.S. companies are expected to report the first 2 consecutive earnings retreat since 2009.
And on the global monetary front, we should be seeing more signs as to where the policies are heading.
Exactly. Just like last week, a number of Fed officials would talk about the potential timing of the rate hike. Jeffrey Lacker, a Richmond Federal Bank chairman who voted for the rate hike at least at last month's meeting will be in the spotlight. If he even retreated from his previous views, the markets are really going to think the Fed rate hike will not take place this year. Lagarde is due to deliver a speech on Monday local time. The European Central Bank, ECB, will hold its monetary meeting this Thursday as well. An increasing number of experts predict that ECB might expand its current asset purchase program, or QE, due to global growth fears. If not, the markets still expect ECB President Mario Draghi might signal the obvious policy moves to come through the press conference. This has been Choi Jin-seok from SBS CNBC.
Now, every person in the world, no matter where they live, want to live a life that is good, happy, and healthy. So the OECD releases a report every so often to measure people's well-being by simply asking them, how's life? And for Koreans, the general answer is supposedly not that great. Our Son Jung-in tells us more.
Life satisfaction in South Korea remains substantially lower than the OECD average. According to the organization's recent How's Life report, South Koreans reported average life satisfaction of 5.8 out of 10. The figure is lower than the OECD average of 6.6, ranking 27th among 34 member countries. The organization studied 11 parameters such as income, jobs, health, and work-life balance to assess how people perceive the quality of their lives. Children in Korea feel a relatively low sense of belonging in school. It doesn't get much better at home as they spend only 48 minutes a day on average with their parents, less than children in any other OECD country. The reading and creative problem-solving skills of Korean teenagers are among the highest, but more of them are left neglected, with 8.5% neither in employment, education, or training, the 9th highest in the OECD. In terms of health, although Korea has one of the highest life expectancies, it ranked the lowest in the category of self-reported health, meaning South Koreans are the least confident in their own health conditions. It's a phenomenon that may be closely linked to the collapse in work-life balance, where Korea was ranked one from bottom at 33rd due to long working hours. South Korea ranked a dead last 34th for community, or the network of assistance available to individuals faced with the crisis. Only 73% of respondents said they had a social network they could rely on for assistance when facing difficulties, well below the average of 88% for countries examined. Son Jung-in, Business Daily.
As early as next year, the so-called Google tax could launch here in Korea. And experts believe that multinational corporations like Google and Amazon have dodged paying taxes worth hundreds of billions of dollars each year worldwide, using tactics connected to tax havens. Our Eunice Kim has the details.
A plan is in place to introduce the so-called Google tax in Korea as early as next year, according to the country's finance ministry. The announcement follows an action plan put forth by the 34 nations making up the OECD earlier this month to curb tax dodging schemes by multinational companies the likes of Google, Amazon, Facebook, and Apple. The OECD estimates as much as $240 billion is lost in government revenue worldwide every year, as corporations use various contrived arrangements to bypass paying taxes, such as diverting the profits they made in countries with relatively high tax rates to countries with lower tax regulations by way of local subsidiaries. Another tactic is positioning their data services in tax haven countries and territories. It's a battle that governments around the world have waged individually, and there's significance in the fact that this blueprint was crafted jointly by the globe's top body for economic coordination. Among the recommendations known of the classified document is a template for country-by-country reporting, which will require large companies to report tax-related data, including profits and revenues, for all regions in which they do business. But critics say without establishing an international corporate tax system, the plan will do no more than patch up a broken pipe as global multinational giants go head-to-head against world governments. Eunice Kim, Business Daily.
And that wraps it up for today. Hope you enjoyed it. We'll be back tomorrow at the same time, same place, so don't forget to tune in then. Thanks for watching, and goodbye for now.